In the 2010s, many companies set out to mimic the success of Facebook, Twitter, etc. by focusing on a niche and then growing from there. But most of them are no longer around. Doximity is, and let's look how they did that. This was more complex than just mimicking things. So let's see. Doximity's quarterly report Q2 24. Yeah, you haven't missed the quarter. It is Q2 24 for them because of how they allocate their financial years. So highlights today, we give an overview of what that is, what Doximity is, how they did it. We're going to have a look at their recent key innovations, then the financials, and last but not least, growth. Okay, business model and updates. So what is Doximity? They describe themselves as kind of the LinkedIn, Google, DocuSign, Slack, and Zoom for medical professionals. So healthcare and medical professionals are the key demographic and key customer segment. And there's professional networking included, but there's workflows, especially around signing documents. And there's telehealth resembling a Zoom for healthcare. So let's take a look. Professional network with rich CVs and specialized CVs, not just what you often see within LinkedIn, which are very high-level ones. These are very speciality orientated. They do have a news feed like LinkedIn and social media. And that's also where one of their main monetizations is, which is around marketing, but we'll see that in a moment. And another pillar, which is really appreciated by the professionals, is productivity. So we'll touch on each of those. But for now, need to know is they are a mix of large players, but tailored for a very lucrative demographic and customer segment, shall I say more correctly. How do they make money? So the biggest one is marketing. There's ads within the news feed, and to say it up front before we move on, it is an ad load of 12 to 1. So if you look at your LinkedIn feed or social media or Google, you have a much higher ratio, which means there's still potential to grow just on that basis alone. There's hiring solutions relating to the CVs, etc. And there's workflow solutions. And this is the area where there's been the most recent key innovations. So how did others not be successful who tried to address certain customer segments, and why did Doximity win, so to say, and be successful? They are now a $5 billion valued company, and with very, very healthy financials, as we will see in the end. One of the main reasons is that money spent is decided to 73% within healthcare by doctors. And their professional networking solutions are free, and so are some other features, and they address doctors. So that's how they say they've got more than 80% of US healthcare professionals on their platform. And as in social media, the monetization is not by monetizing the users, it is by monetizing advertisers to those users with rich targeting information, etc. So that is, look, the return on investment for the advertisers, it looks very, very convincing. It's done by third parties, but even if it's like half true, that's a very decent return on investment. Before we move on, please hit the like button if you like the video. So what's new this time around? Let's first understand what are their workflow solutions. Most of these have been around from the beginning, and if you read through user reviews from doctors, these are really the main things that they love about it, apart from the professional networking. There's secure texting, so that there's no risk around patient's privacy and so on. The dialer is a mobile app which they can call patients, but they don't necessarily have to display their own number. It is compliant with the healthcare regulations. I did look it up. Zoom is also compliant with this, but nevertheless, it always looks good to advertise this way. And fax has been one of the most important things that has been called out from what I've seen in many, many reviews on the app. So doctors can sign on the screen or insert a signature. They can make annotations to files of patients and send it via their mobile phone. And there's literally lots of stories and like after hours, etc., that have helped patients and the doctors save time. So these workflow solutions have been really important in building a real audience. And this is one of the things. It's not just a social media solution. It's really a solution that takes into account some of the real pain points that the customer segments have. What's new in 2023? I'm not going to read out everything, but they now have a connection to Best Doc AI, which is a Gen AI specialized platform that finds the best medical expert in a local area. And as you can imagine, that does require its dedicated language models. You can't just use Google for that necessarily. You'll be probably getting the most popular, but that doesn't necessarily mean that they're specialized on what people really need in that moment. Hospital directories, as always, these kind of things within workflows can be very useful. They're talking about the they got laminated sheets with them. Well, welcome to the electronic era. So they're bringing these kind of things to a digital solution. And I mean, these things may sound small, but again, it's very tailored to the customers. They can skip hold music when they're on with pharmacies and insurances. And apparently, according to one analysis, it saves them 1 hour per month. Who would not like an hour per month? So here are some more stats, which all of them support the workflow solutions that they're working on. And adoption figures, 500,000 active workflow providers, which means kind of users. And secure email, as we said, fax and signature. Telehealth, I skipped that one a little bit, but they do have a Zoom-like solution, which is free. So basically they can talk to their patients via similar to FaceTime and WhatsApp and Zoom, and 40 minutes are included for free, which is kind of the same threshold as you have with Zoom, and scheduling solutions as well. So yeah, this is the workflows. We have check out our flagship course where we are covering really fascinating background knowledge for digital business models and covering also companies like Doximity and other very, very interesting players that you may not have heard of, but that have very interesting approaches. And you get the background knowledge to understand why some things work and other things do not work. Financials. So I mentioned, firstly, 40% CAGR, constant annual growth rate since 2019. That's pretty staggering growth rate in revenue. And yeah, they still use the EBITDA and margin. Not sure why, because they are profitable. They could use their own profitability figures. Have a look here. Okay, revenue 130 million in the quarter that ended. Income from operations. This is a almost 30% margin. So 30% gross margin, gross operating margin, and 27% net margin. Which startup does have that? There's not that many. And I also looked at the balance sheet and it looks really, really good. There's almost no long-term debt, or no long-term debt for that matter. Very healthy financials. Now, that said, just timely reminder, we are not ever giving you investment advice. This is not investment advice. When I looked at the share price, there's also already growth factored in if you look at the PE ratio, etc. But remember, check out our terms and conditions. This is not investment advice whatsoever. It's just quite remarkable for a startup. It's not a startup anymore. They have had their IPO, etc., but it's still considered a young company as far as I'm concerned. Growth strategies. So here, you're not surprised to see that is when the pandemic happened. And we have seen, if you watch our other videos, we've got a number of candidates which also had a sugar rush during the pandemic, and then they lost and they started rebuilding. And some of them are back to the peak of the post-pandemic. Doximity has managed to retain their growth rates, barring one quarter. So very great success story. And yeah, so scheduling, cross-selling, etc. So great success story. This is FY21 is their IPO date. And key metrics on the financial side, they talk, like as many do, as many SaaS and other solutions, talk about land and expand strategy. And one of the key metrics, if you're talking about that strategy, is the net dollar retention rate or net revenue retention rate. And yeah, it sits at 114%. Anything above 100% is considered good. Some younger startups or even younger IPOs fall below that due to churn. 114%, I looked it up according to one study, is literally in the top 15% percentile. So very good metric there. And here's a market outlook, call it a TAM, total addressable market, that they have found. So 419 million was their annualized FY23 revenue, and they see a combined 18.5 billion market that they can address in the near term. So they're 5% there. So there's a growth opportunity there, no doubt. And again, check out digitalbizmodels.com/course. This is our flagship course. And reminder, it's no investment advice. Check out our T's and C's. Thank you very much.